Now, even as Indian stocks rose earlier today, lifted by an 8% surge in Reliance Industries after Facebook invested in its digital business, Rupee weakened. For more on that, let's go over to my colleague Sakshi Bajaj.
That's right. It has been a mixed day of trade as far as our equity and our currency markets concerned. The Sensex has surged over 31,000. At the moment, it's trading above 31,000, surged over 700 points. The Nifty is trading comfortably above the 9,100 mark, while the rupee remains a concern as far as our currency markets are concerned. Now, what is really hurting our rupee, which is nearing the 77 to the dollar mark? Remember, it's weakened to its all-time low today. And what is really hurting the rupee is, of course, the slide in oil prices. Is of course the US dollar strengthening, as well as investors tracking the spiking COVID-19 cases and being concerned about that. To decode this further and whether the currency will face even more near-term pressure, we have Ashutosh Khajuria joining us on the phone line. Sir, thank you so much for joining us. He is ED with Federal Bank, and we'd like to ask you, will the currency continue to slip further?
See, actually, the sentiment of all emerging market currencies is quite weak vis-a-vis dollar. In not only emerging market currencies, even because there is something called a phenomenon of flight to safety, and any turbulence happens. I mean, even if it happens within United States, you will find people buying dollar assets and U.S. treasuries and all those things. So as a result of that, they try to exit the so-called comparatively less safer economies or less safer geographies also. So I think the first on the firing line is always the emerging markets and all that. And in India, because our fiscal math also had been a little, more stressed, though our reserves are very sound. So this is the reason why, I think the fall could have been much steeper. I would see the other side of the coin,
But do you see the rupee weakening further, sir, in the next 1 week?
I think the sentiment is weak, and now the news emanating from India as to how complicated or complex the situation related to COVID becomes, and how much longer it would take to restart the economic activities would certainly play its role. So I think there is some uncertainty, and whenever there is an uncertainty, the rule is buy dollars. I mean, when you buy dollars means you are selling INR and all.
But sir, the rule is also, sorry to interrupt, but the rule is also to go towards the safe haven appeal of gold, and gold prices aren't surging.
Gold prices had already moved from 1,300 odd to $1,700+ per troy ounce. There could be some profit booking. It cannot be a unidirectional move and all. So it cannot always be a secular move. Yes, gold has strengthened in past, 3 to 4 months. It has even, crossed a long time, I think about a decade back, it used to be somewhere around $1,900, and from there it has fallen to as close as maybe $1,050 per troy ounce. And from $1,050, it was stable, more or less stable, between 1,200, about 1,150 to 1,250. Now, this surge you are seeing today vis-a-vis yesterday's price or maybe last week's price and all that. But just see the rally in gold. Gold has already been, one of the most sought-after assets. U.S. stocks had not been there, or any stocks anywhere would not have been that. All stocks have fallen from 20% to 65, 70%. I'm talking of various indices, including the developed markets. Leave apart only emerging markets.
Right. So you do see pressure continuing for the Indian rupee. And that, of course, is something that investors are going to wait and watch out for. Like you said, emerging market currencies are also facing a pressure. So therefore, pressure all across the board right now.